G'day, folks. I want to discuss investor sentiment. We are going to be looking into some of the biggest investors and their current opinions on this market, whether it's Michael Burry, Ray Dalio. We're going to be listening to Kevin O'Leary, Robert Herjavec, Mark Cuban. I have compiled just a list of different opinions because they vary on opposite ends of the spectrum, which seems to be highly relatable to my comment section these days. So this is a conversation you can appreciate. Hit that like button. I did pull some clips, but I want to talk about some of these big investors' trades first and foremost in the first quarter of the year, because the biggest negative Nancy typically in a market has always really been Michael Burry. He's constantly been negative on the growth rates of the market. He's constantly shorted stocks, talked about the speculative bubble, but recently in Q1 he's been one heck of an aggressive buyer. Outside of taking a short position on Apple, I mean, he's picked up Booking Holdings, Warner Brothers, Google, Facebook, a lot of other companies I haven't really looked into much. So this guy is starting to see deals in the market. If he thinks Google and Facebook's a buy, I think that would be typically a better sign for the index, because there's some pretty big weightings up there, right? Now let's talk about Bill Gates. Bill Gates is a bit of a different story here, all right? Because Bill Gates, he's been probably more negative than most investors I've seen. I've been watching videos on some of the recent updates surrounding his portfolio, and he's been reducing or completely selling out of a ton of positions for Q1. Now, I did realize that he has been buying a little bit here and there, but again, it's kind of crazy to think that in Q1, where Michael Burry was buying, he completely sold out of Google. He's been selling out of things like Deere & Company. He's been reducing positions in Berkshire. Really intriguing stuff, but I think the position that he reduced in Berkshire was to buy A-class shares, because I think he did pick some up. Don't quote me on that. But there's a lot going on here, and it's kind of hard to wrap your mind around certain time frames with this, and this website keeps popping up this Warren Buffett thing that's got to get out of there. But yeah, so Bill Gates, as far as I can tell, relatively negative on the market. Now, Bridgewater, Ray Dalio's fund, this has been relatively fascinating, because it's almost as though he's doubled down on his bets. I mean, Ray Dalio here has really made BABA one of the largest positions in the portfolio since it's dipped below $100 a share. A little while back, I mean, BABA was quite a bit of a smaller position, but now it's up there with Procter & Gamble, as global market index funds. It's kind of funny how little exposure he actually has to the S&P 500 through SPY. But again, really intriguing. And one of the most intriguing things by far, and has been causing a lot of attention, and I don't know if this is just for media stir, but he did manage to pick up, GameStop and I believe AMC here. Now, GameStop, I think this, honestly, for me personally, I would have never touched GameStop. People are pointing out that it's such a micro position in his portfolio. It's like the 800th position or something like that. The 848th largest position. It's barely a drop in the bucket to make a difference on the scope of his portfolio when we're talking about the larger weightings here. And again, I don't know if that was just for publicity, if he actually thinks there's some motive into the future, but for a guy that's primarily buying foundational based companies that have very long track records, incredible growth rates, and highly diversified, that's kind of out of the wheelhouse for somebody like a Ray Dalio, in my opinion. So it could just be for publicity stunts. But let's take a listen to some of these really big investors that many of us love, watch, whether it's Kevin O'Leary, again, Mark Cuban, just a few of the Shark Tank guys. So take a quick listen. Very fascinating.
What we're seeing on the market side is we think there's still about 20 to 30% of bottom to come. And I think
from here?
From here.
Down from here?
Yeah.
20 to 30% down?
Because we think
What makes you say that?
I think there's a lot of FUD in the market, fear, uncertainty, doubt. And what's happening at the operator level, small businesses don't know what to do. Interest rates are going up, but the bigger issue is getting workers. I know so many businesses that we've invested in, small businesses, they just can't get workers. They can't get people to show up. It's still a problem. So I think it's going to take a few months for that to work itself through the system.
And it's true that we have inflation and there's a lot of concern about a recession. I don't see any of that in the short term. I mean, I'm living in the real world here with over 30 private companies in our portfolio in almost every geography in the US. Right now, things are booming. Sales are on fire. Cash flows are better than they've ever been. And I know we should be pessimistic, but I can't get there right now because I'm trying to hire people and I can't find them. Try and find a server in Los Angeles for a kitchen operation. Minimum wage $15. I have to pay $25 in some cases just to get them to come to work. So there's a lot of demand at all levels for employment. So I'm not that worried about the classic recession. Energy prices, well, that was self-inflicted. We shouldn't have canceled pipelines. That was bad policy. It can be fixed. Supply chains will be fixed as well. So right now, if I were to buy stocks, which I am doing, because I mean, you know, you can't time the market, Becky. Today's a good example. If you were not in the market today, you don't know which of the 20 or 30 days in the next 12 months give you all the returns. Today was one of them. So trying to time the market in volatility is next to impossible.
Yeah, I mean, markets always overreact and overcorrect to news or anticipated news, particularly after a big run-up, because speculators and investors want to protect their profits, so people run to cash. But the reality is, whether rates go to 3% or 4%, there aren't a lot of other good places to put your money. And so while there may be a lull now, just like we've seen in the past, people will come back to the markets.
All right. Right now, you're quite right. I mean, a whole generation is shocked by the prospect of mortgage rates hitting 4%. Of course, when my wife and I got our first mortgage, I think that's what we were paying per day. But I exaggerate here to make the point. Are young investors going to be spooked? Does that worry you that they, once burnt, don't want to return to these markets?
No, I mean, look, like you, my first house was at 12.75%. And, you know, as rates went down, I always thought I was getting a bonus. But young investors are getting used to crypto. They've become crypto natives. And so they're used to a lot of variability. They're used to a lot of speculative run-ups and run-downs. And so I think they'll be the least spooked of all generations.
Now, Robert Herjavec, out of all of these, seems to be the most negative, and I don't know if he's just doing it through the basic, you know, looking at the S&P 500 and realizing that if everything can drop 20 or 30% and go back to those kind of March 2020 highs or lows or somewhere in the midst there, that's maybe where he's getting his opinion of the market still have a potential drop of 15, 20+%. Whereas, and he has the same opinion Kevin O'Leary really does, is that, you know, he thinks because, well, it's kind of a little adverse, but he thinks because they can't get employees, that's a negative thing, or the way it kind of sounded. Whereas Kevin O'Leary thinks struggling to get employees and having such robust demand says the economy is actually doing fairly well. And it's kind of crazy to think that Kevin O'Leary is a little bit more adverse to a recession coming around the corner, right? And I'm Mark Cuban. This is a bit of an older video from him, but he made some really good anecdotes there that this market, or so we thought, was a little more adjusted to seeing the volatility. But now that the volatility has been so drastic to 80, 90% downside risk, especially in the crypto market, something tells me those retail investors have lost their stomach for volatility. But at this point, many of you are well aware, I am still fanatically bullish on this market from what I'm personally seeing. Now, again, I'm not trying to say bottoms or tops here, but I'm telling you right now, like I said yesterday, is the time to sit down and start doing some homework if you want to make some massive returns in the coming years, because the discounts are here. And like Michael Burry buying Google, guys, you can only sit on your hands for so long, because I think the limited downside is starting to show itself, and that we're not going to be seeing, you know, another 30, 50, 80% correction in some of these stocks. I think those times are behind us, and we'll see what the future brings. But I want to know what you think in that comment section below. So stay cool, stay awesome, and as always, I look forward to catching you in the next one.